Mark Selby, CEO of Canada Nickel, advancing the Crawford nickel sulfide project, the world's second largest resource, and unlocking the Timmins, the potential of the Timmins nickel district, potentially the world's largest nickel sulfide district.
You are indeed. Welcome to London again. Good to see you.
Good to see you, Mr. Murphy.
1-to-1 going on. Busy over there?
Yeah, 2 full days, probably our best 1-to-1 conference ever.
Oh, fantastic.
The exciting piece, we actually had meetings with a couple of generalists coming into the space.
Right.
So
it's inevitable. But it's inevitable, not just because it's kind of nickel, but in terms of the development stage that you're at, people get a little bit more excited. And I think a lot of industry looking, as a generalist and industry looking at each other at the moment.
Yeah.
So that's good. And the UK, European guys?
European guys. Yeah. So, no, it was great to see it. And again, it's in terms of people really figuring out now how to play the energy transition.
Yeah.
You know, so I think they realized that all the supply chain stuff, again, the Biden tariffs this week, just one more thing that this is real, that they are going to do everything it takes to get China as much out of the supply chain as quickly as they can.
And Russia
too, yes.
We saw that.
That other nickel producer too.
Well, nickel and uranium I'm referring in this instance. So I think everyone's super excited about actually the government kind of stepping in and actually making things happen, which we've talked about a lot. But more about you.
Yes.
Lot of news coming out of you. That young lady over there behind us, corralling you. So where should we start with? A bit of network on Man.
Yeah, and then I think the exciting part, right? Start of the year, $35 million from Agnico Eagle. Yeah. We've talked about the potential of the district, but this is the year with all that capital that we actually get to execute and unlock it. So we've had a great start since we talked to PDAC. So new market, new discovery. Again, proving the model. We've got a geophysical template that works. 94% hit rate in terms of more than 100 drill holes over the last 3 years, and so that's all good. We've put out several news releases on Reid. Bigger footprint than Crawford, and again, this deposit is several kilometers long, 800 meters wide. So if the drilling plays out like you think it's going to, you're going to have a much lower strip ratio and much larger resource than we have at our flagship deposit, Reid.
Right, it's big.
Yeah,
it's getting bigger.
Yeah,
and I guess the skill is knowing how to kind of navigate the kind of funding for all of the above, right?
Yeah.
Because you can compartmentalize this and say, and I mean, look, you've got some strategics in there who are very keen for offtake and so forth, and they've stumped up equity and investing into you guys. They believe this is going to work. How do you map this out over the next 12, 24 months? Because it's easy going to get lost in the optionality here.
Yeah.
Right?
Yeah. No, so the key is, so in terms of unlocking that regional potential.
Yeah.
The thing that we really want to set up, so we've stated that we're going to publish 7 additional resources by this time next year. Wow. So we'll have 8 resources.
It's already, did you say it's already the second largest?
Yes.
Right, okay.
Yeah, one is already the second largest, and we're going to have 7 more, of various sizes relative to Crawford by this time next year. And we're targeting making 6 additional discoveries. So that kind of takes the geology, says, okay, this is a district.
Right.
By this time next year, clearly established that. Number 2 is, we're doing the mineralogy and met work. Like these deposits, you have to do that, to find out how much of the nickel is actually recoverable. And so, again, the theory is once Crawford's gone, all the engineering that we've done to design the flow sheet, design the process plant, we can literally just paste that around, it won't work necessarily for all of these, but it's going to work for a bunch of them. So a year ago, shortly after drilling Reid, we cut and paste, took some Reid samples, got it through, got the concentrate grades and recoveries that we're expecting. We announced last week, we did the same thing with the Man Northwest, which is one of the eastern properties. Yeah. Again, took some samples, dropped them through the Crawford standard flow sheet, got 59% recovery, and got the concentrate grades that we're looking for. So, we'll continue to do that so that, by the time we get to the end of this year, we've not just done a bunch of drilling. We've got a bunch of resources established. We've got, effectively the initial met work done to show that, this is it. And so then we'll have a whole series of projects that can then go down the feasibility study path. And remember, we went from resource through to full feasibility study in just over 3 years. Yeah. We should be able to do it even faster with these other projects. So that's all keyed that up. And in the meantime, by the end of this year, we should have Crawford fully financed in terms of the overall financing package, working with Scotia, Deutsche Bank, and Cutfield Freeman. we'll be well down the permitting path. We've completed the second stage, and hopefully, by the end of this year, less than 6 months away from, getting permits to start construction of the project. And, the other, big chunk of news flow is, we announced we started the front end engineering design. So we're taking, when you finish a feasibility study, you're at about 10% engineering.
Yeah.
By the end of August, we'll be up to 30% engineering. Good news, we're, dived, hard right into it right now. And so far, there's been no negative surprises and a few positive ones. So we're quite happy with how that's all playing out.
I mean, you've been kind of screaming forward with this and doing it quite a, was a very compelling story in terms of the time frame that you're doing it in. But there have needed to be a bunch of proof points for you, because you've always had to deal with things like, the grade, the funding for the CapEx, the need for strategic partners and a route to market. All of those things you've had to answer.
Yeah.
So we'll start with the first one, because we did some more network analysis of land. You're sitting at 59% recoveries on two samples of say roughly 0.3, which to most people sounds a bit low.
Yeah,
right?
but that's higher grade for what we're doing.
Right.
And again, that was the check.
Yeah.
We'll see where the average comes out, but and again, these deposits will have anywhere from 30 to 60% recovery, and we'll see in the end where man lands overall. But that that's the kind of number that makes us excited.
Right. Okay. So, and I think we've dealt with enough over the months and years to say that that's perfectly acceptable. A lot of comps on that globally. So we're good on that. Next thing, and I'm trying to deal with this for people who are perhaps new to the story, might be looking and asking the same questions, right?
Yep.
So we've answered that one. Second one is obviously around, okay, you're at FID. So you're getting to that point where you're going to be able to make an investment decision based on what you see in front of you and the return.
Yeah.
I mean, what are we looking at in terms of IRR of the last study?
Yeah. So the feasibility study, including the carbon capture credits, we're looking at 18% IRR.
Right.
Yeah.
Okay. So, and in this space, is the scale that matters.
Yeah. So if you can get mid-teen IRRs
we're
on
good.
40-year projects, excellent.
So that's key
big mining companies.
Yeah.
Check.
So that's the key thing here for folks to remember is, okay, the scale. And the fact we're talking about right now, 40 years, these things tend to go on and on and on. So which kind of brings us on to the next, the kind of portfolio that you're building up here. If you're going to have like 7 or 8 of these by this time next year, is how do you compartmentalize who you work with, which balance sheets, and what are they going to want to see from you to be able to kind of step in and say, well, okay, we'll fund this first one.
Yeah. So the key here is once we have Crawford over the line, right? Mm-hmm. And again, by this time next year, we should be in great shape. So then all of a sudden you've got, and again, today, we've got about a 250 million market cap, project NPV is $2.5 billion US. So in today's Canadian dollars, $3.5 billion. Yeah. And so we should re-rate dramatically as we do the final de-risking through this year. And then all of a sudden you go, oh, okay, it's not just Crawford. We've now established this entire project development pipeline that you can multiply that number,
right. And
into what we've got across the base,
costs, which you can extrapolate over these other ones and hasten the delivery of those.
Yeah. So we did Crawford in 3 years and it cost us, X million dollars to get to feasibility study. Yeah. We should be able to do it, in a fraction of the time and a fraction of the expense, for these other projects.
So if I go back to like the Samsung or the Nikko Eagles of this world, and they're looking at the speed at which you're doing that, and nothing about that concerns them. They looked at the process and went, no, that stacks up.
Yeah. No, we've got Anglo-American, Agnico Eagle, and Samsung SDI's cornerstone. Right. There's very few base metal projects out there that is really quality cornerstone.
But is it what are they believing? Is the guys doing the reports, the Senkos of this world that kind of tick the box for them?
Yeah, no, we've got a team and we're using real engineers to do the work. And again, these guys aren't going to put their money into people who aren't doing real good work. And so and that is a quality project. So the fact that we've got 2 of the world's biggest mining companies in the story should say, okay, they believe in what the underlying economics of these types of projects could look like. And Agnico gave us $35 million to go, if you think you've got a district, go drill it for us.
So, because it's a fair question for people to ask, because if you look at something like Horizonte, which kind of blew up recently, I know we were warning about that 3 years ago, but it blew up, so people will be nervous about the ability to deliver. But you're saying we've thought of that.
Yeah, so Ausenco has been a long-term partner for us. If you look at, big base metal mills, they've the projects that they've come into, some of them, those projects had a checkered past, but when they got involved, whatever that feasibility study number is, they've been able to deliver those projects for that feasibility study number, on time, on budget, and a bunch of their projects, have actually ramped up above nameplate design. So that's something that doesn't happen very often. There was a gold project out in Nova Scotia that he did as a turnkey EPC. Did that on time, on budget. They did the Constantia project for Hud Bay about 7 or 8 years ago. That came in on time, on budget. They did Taseko, the Gibraltar. They called it an expansion, but it was a new 30,000 ton a day mill. Again, on time, on budget, and actually ramped up ahead of design capacity. So that's who we're working with. And again, you just have, and the great part too is we've got a great project leader, Des Tranquilla. He was the lead engineer, the lead on the engineering firm that built Detour. So so he was there, which is a couple 100 kilometers away. Other than the fact that it's gold, it'll look, smell, and size wise look very much like what we're trying to build at Crawford. So he's already done it once. Okay,
what are the other things that could put off any potential financial partner in terms of that infrastructure play? Because obviously there's a few plants there. We've got Glencore, in the district. Because developing districts are great, but it's a big undertaking. And if there isn't enough there to start with, roads things to put in, who's funding that? It's stuff which is like a your responsibility. It becomes difficult. But what is there today?
Well, so that's the key piece. This is not, a series of copper deposits, that 3,500 meters, in the Andes somewhere. We are in an area where you've got, 60,000 people, who live within an hour's drive of most of what we do in about half a dozen different communities. We have the major natural gas pipeline for Canada that goes right through it. We have one of the major Trans-Canada highways runs around the properties. We'll have a rail line access directly into Crawford, and it won't take much to be able to extend that rail line into some of the other properties. Some of the other properties are actually closer to the rail line, the other rail lines in the area than what we have. And the great thing is Ontario has a low carbon grid power available, which we're able to tap into. So all of that infrastructure, helps make why we can deliver a low grade deposit is because we're able to leverage all that existing infrastructure and having a workforce that gets to drive home every night, and that's far cheaper than having to fly in 1,000 people in and out every week.
Right. So what's going to blow this thing up if at all?
Well, I think the thing that we've been struggling with is the nickel market story in terms of Indonesia is going to supply all the nickel the world needs, so we don't need any of the projects. Well, we're going to talk about that in a second.
Yes, let's give us a summary now. Come on.
So. Yeah, no, I mean, the key thing is it's dirty nickel that comes with a massive carbon footprint, the environmental devastation. You can mine some of those deposits a little bit cleaner, but the Chinese, in order to effectively high grade these deposits, are not doing that. And there's a bunch of coastal communities that are feeling the full brunt of it. And there's some good videos online. I encourage people to get educated on that. And, the reality in North America, we're going to see nickel demand. It's been 120,000, 140,000 tons for the last 15 years. With all of the battery plants that are under construction, and going to be built, we're going to need to add 200,000 to 300,000 tons of nickel supply. So Crawford's the Western world's largest nickel sulfide operation.
Yeah.
But we need 5 of those just for the United States. We need another half a dozen of them. If Europe wants clean supply. So again, part of this drilling off this regional district isn't just some sort of academic geological exercise.
Yeah.
The world needs lots of clean green nickel that can get to market in the next 10 years. Yeah. And what we have in Timmins, we really think will be the world's largest nickel sulfide district and has the potential, to put 5 Crawfords into production in the next 10 to 15 years because you've got all the infrastructure in place, and we can take the template we've got for Crawford and then cut and paste it across the region.
I think that's the interesting thing about what's happening with the US and Biden, signing off various things this week, is because there's going to be a realization that you're going to have choices to make. There will be a bifurcation in pricing in terms of what OEMs will be under a lot of pressure to declare and record and so forth. Your nickel, green nickel versus what is driving the nickel market at the moment, which is China. They'll have a different set of rules, different set of regs. And I think people are going to have to make choices in terms of retail buying on cars as well. What's the specs?
Yeah, 100%. They want to know. People concerned about cobalt coming from the Congo.
Yeah.
They're going to be equally concerned about, nickel coming from Indonesia. And the other thing with the nickel market is, there's a lot of bad analysis. We did a little rant last time we talked to PDAC, but just briefly, nickel demand has grown at 10% a year for the first 3 years of this decade.
Yeah.
There was no analyst who had, anywhere close to that number 3 years ago.
Yeah.
We will see double-digit demand growth again this year. And again, no one has double-digit demand growth going forward. So not even close to that number. And so when they talk about potential surpluses, they're using the wrong demand forecast.
Yeah.
So we need everything Indonesia can deliver. The globe needs everything Indonesia can deliver, and also needs another 500,000 to 1 million tons of clean nickel, from projects like ours.
And it was endless on a high. So nickel's hit what this week?
We almost hit $20,000 a ton, which 3 months ago when we're sitting at 15,500, I said we're going to get to by the end of the year. So we almost got there this afternoon. So.
Okay. Well, we'll talk about that in a minute and get people into the weeds because they love that weekly show. Congrats, Mark. I know you've got a few more meetings to do.
Yeah.
So let us know how you get on with all of those, and we'll see you next week, okay?
Sounds great, sir.
Cheers.